Well, let's get more now on the significance of the move. I'm joined live from Irvine, California by Dan McClory, Managing Director and Head of China for Bousted Securities. Good to see you again, Dan.
Thanks, Rachelle.
Now, it was a milestone when the MSCI first included China in 2018. So what do you think led to the MSCI's latest decision to really build on that this year?
It's got to be, number one, China's opening up of its financial sector and clear signals being sent, but also just the size. I mean, you can't ignore the size of the world's second largest stock markets when they're combined. And I think over time, you're starting to see through vehicles like the Connect that goes from Hong Kong to Shanghai and Shenzhen to Shanghai now, that is actually resulting in inflows and outflows that are benefiting and being able to invest in A-share stocks. So I think it's a total of all those things, but don't overlook the fact that there are now major index funds around the world that allow investors to invest through them into the Chinese stock market, which had been very difficult to do until recently.
So then, given China's economic slowdown and this ongoing standoff with the US over trade, how key is the timing of this?
Well, I think there's an even more key event. Of course, that's sitting in the background and affecting everything, Rachelle. But look at the performance of the Chinese stock exchanges last year. They were the worst performing in the world. Hong Kong was, somewhat close behind that race to the bottom, whatever you want to call it. And this year, the Chinese equities markets are up somewhere around 24%. So I think that's tremendous news in the face of the backdrop of trade wars, trade truces. But again, if markets and the United States, for example, are looking for signs that China is willing to open up and China is willing to bring others into their capital systems, they're starting to see that. Because remember, Rachelle, this is a two-way street. So MSCI invites constituent companies from various stock exchanges to participate in their index, and they establish certain time intervals in consultation with those countries and exchanges. If MSCI wasn't seeing this same opening up, this same leveling of the playing field, they certainly wouldn't have accelerated the adoption of more Chinese names into their index.
So how significant is this in terms of Beijing's efforts to internationalize the yuan?
It absolutely gives China one more thing to talk about in these, global or the bilateral conversations with the United States. I think it also puts more pressure and more onus on China to make sure that there is a true opening up in terms of corporate governance and other nuances that the Chinese stock exchanges have that, quite frankly, others don't, such as the ability for companies to suspend themselves from trading because of pending information, as opposed to, say, the regulator or the stock exchange itself doing that. So it's also creating an imperative within China that now that they've upped their game and they've been included in a broader way in this index, now they've got to really play by those rules. And I think they will, and they'll be up to the challenge.
And you've tapped on this a little bit. So in terms of the challenges then, what are some of the downsides that come with this?
Well, clearly, I think we both know as observers of the markets in China, Rachelle, that China stock exchanges are driven largely by a lot of retail sentiment. So there's emotion. There's also an understanding that, shares generally don't go down, or if they do, they don't go down for long periods of time, and perhaps the government or the national team will step in and help that out. Remember, most of the participants that will buy these stocks as a result of them being in the indices are institutional and professional investors. They're not going to be driven by emotion. They're going to be pretty level-headed. They're going to be sharp-penciled. They're going to do fundamental analysis. So this is going to bring a different breed of investor into Chinese equities. So it won't be the emotion retail-driven domestic investor that maybe has come in and out of the Chinese stock markets. It's going to be a much more savvy, much more informed global investor who, again, will hold China and these various companies to account. And if they're not transparent or if they don't see good corporate governance, they simply won't buy them.
So then, looking ahead in terms of your outlook for China in 2019, what should Chinese regulators do to make sure that they try and avoid some of these wild swings while continuing to further open up the market?
Rachelle, that is a great question. It really is. There are so many aspects to that. So, first of all, just more of what we would consider to be an absolutely open market system. And I mentioned a couple examples before. So there are circuit breakers, for example, that set in when certain levels of losses are triggered in the decline of a share price on Shanghai or Shenzhen. For the most part, that doesn't exist in other Western exchanges. A price can go down to zero. It can go down to 90% down, and that happens, as opposed to the circuit breaker. The second one that I mentioned earlier has to do with the fact that companies themselves can decide on Shanghai or Shenzhen if, I've got some material pending information, I think I'm going to suspend trading in my stock myself. And oftentimes that was used by Chinese companies because they wanted to avoid a meltdown in share price, so they kind of took their own little hiatus. I think the CSRC is onto that, and I think they're definitely going to have that under control. But something else to point out is, there is an availability for Western investors to now participate in the Chinese markets. There is a great index fund group, and it's in New York, called Crane Shares. That's with a K, Krane shares. And this really allows individual investors as well as institutions to participate in these various, the MSCI indices. There's one for healthcare, there's one for environmental, and it's a great way to start getting, as investors would call it, exposure or participation in Chinese stocks at any level of investor. So I think that would be a good kind of walk before you run strategy for a lot of people that are out there that say, I want to participate in the Chinese stock market. How do I do this? Check out Crane Shares.
All right, Dan McClory, Managing Director and Head of China for Boustead Securities. Thanks so much.